Hi, my name is Cory Fulton, and I'm a software and industrials analyst here at Gabelli Funds. Today, I'm going to discuss Lennox International and provide a brief overview of the North American HVAC market. Here's an overview of the global HVAC and refrigeration market, which we place at a value of roughly $147.5 billion. For the purposes of today's presentation, and since we're discussing Lennox International, we're going to focus on the HVAC equipment market, which is mainly the verticals in which Lennox plays in. So showing just the HVAC market, which we value at roughly $110 billion, broken out by geography, it is important to note that the global HVAC market is much more commoditized, with window units and mini splits being the predominant cooling systems used abroad. While in the US, we mainly prefer central air conditioning. Central air conditioning is mainly dominated by 5 major players who collectively make up roughly 90% market share. And here on this slide, we see a breakdown of the global HVAC market by company, with the 5 major North American OEMs pictured. Drilling down even further, by not just geography, but by product set, we see just how concentrated the 2 industries in which Lennox plays actually are. The industries are characterized not just by concentration, but extremely stable market shares, and have been so for roughly the last 5 to 10 years. And now we discuss some profitability drivers. Here we show some of Lennox supplier sourcing, which has been a big boon to profitability as the company has been able to cut roughly $35 million in input to COGS annually over the last 5 years. The company now is able to source roughly 50% of its input costs to COGS from sources based in Asia. Moving to the next slide, we discuss how Lennox has power over its customer base. So further down the market, purchasers of AC equipment are actually not the homeowners, but the contractors. And as you can see from the slide, this is an extremely fragmented market with roughly 112,000 contractors. This allows companies like Lennox to pass along regular price increases. In addition to a fragmented buyer base, the ultimate end customer, the homeowner, usually only replaces their HVAC system every 15 years, leading to a lack of pricing transparency on what equipment and installation should cost. Due to this fragmentation and lack of transparency, we move to the next slide and we show that it leads to this: consistent price increases. These have added to the revenue growth that we're about to discuss on our next few slides. And now we discuss our revenue drivers. So we focus on the relatively stable demand for HVAC units. And while one may think that demand is highly tied to new construction, much of unit demand comes from replacement, which represents 85% of residential unit volume and 70% of commercial volume respectively. Coupled with the price increases that we just discussed, the industry has actually seen rather stable growth over the last decade. And with these dynamics in place, we now discuss Lennox. The company has 39.9 million shares outstanding, last closed at a price of $292.54 for a market cap of $11.7 billion, net cash on the balance sheet of $991 million for a total enterprise value of roughly $12.7 billion. On this slide, we reflect the historical revenue and profitability of the company. We see stable growth since the financial crisis, coupled with rapidly improving profitability since that time as well, mostly due to the pricing power and cost takeout from the power of suppliers that we previously discussed. And now we conclude with our valuation of the company. As you can see, each segment has very strong margins and high returns on invested capital. We come to a sum of the parts basis using our PMV valuation method to get to a share price of $277. So while we think the stock is currently fairly valued to roughly overpriced, we highlight that it is an example of how we thoroughly research an industry and companies within the industries in which they sit here at Gabelli Funds. We look for opportunities to purchase quality businesses trading at discounts to our estimated private market value. And so while Lennox may not be offering us an adequate margin of safety today, we will continue to monitor the business and the competitive landscape and wait until the market gives us an attractive price at which to purchase shares in what we deem to be a quality business with favorable market characteristics.